We recently discussed how we will get wealthy thanks to the Fed. Now, that may be a generalization. Well, Nick, that's just clickbait, you may even remark. However, when compared to past cycles, all of the elements surrounding the Fed's current actions have caused prices in this market to go completely out of control and melt faces. I don't think this time is any different. Indeed, I do think that the exact same reaction, albeit on a larger scale, will occur. Since this is the current daily outlook, let's quickly review the market today. HBR up 3.6%, XRP up 6.7%. We have several other altcoins up in a major way as well. XLM is up 3.5%. As you can see from the 9%, 5.2%, and 4.8% pushes, there are a few altcoins that are bouncing significantly. All in all, it's a huge gain. We now examine the current state of Bitcoin if we are also investigating that. Ethereum for $111K at around $4K. Both of those haven't actually changed all that much. However, XRP is up 6.9% today at $2.60, was 1.8%, and Bitcoin was 0.8%. In comparison to Ethereum, we are still in this wedge when it comes to Bitcoin. Here, we're waiting for anything to occur. Of course, we could reject if we are beginning to trade upward. Before we eventually have that significant break to the upside, we might retest the bottom trend line and just sort of squeeze here. Yes, it wouldn't be a crazy thing to happen, you know. It has also occurred numerous times in the past, resulting in record highs. However, as of right now, if you look at Bitcoin on the 4-hour time frame at least, you can see that things are not looking too horrible. Even on that one day, our building still looks excellent, don't you think? That higher low is still in place. Technically speaking, we just closed at a higher high based on the candle body closes. I'd love to see a spike above 114K, but consider Bitcoin's structure. It looks fantastic here. Naturally, the scenario with Ethereum is extremely similar to that of Bitcoin, but we're just squeezing a little bit tighter here. That rejection may still come our way, right? All we have to do is exercise caution. Nevertheless, I continue to believe that we have a far bigger upward rise. Additionally, considering this even over a 24-hour period, we do, in theory, have a lower low based on the lows on the 17th and the 18th. Since breaking over this upper trend line would also be very bullish and result in a higher high, I'm still keeping an eye out to see if we can break over those prior highs. However, the lower timeframe structure continues to indicate that Ethereum is doing quite well. Following that, there is XRP, which everyone is curious about. Indeed, XRP is extremely bullish. I'm not sure if this is current. Let me quickly refresh. We basically just broke out of the trend lines on this chart, which is extremely bullish to see because it once again makes it evident that XRP is beginning to form a very bullish structure, especially on the 4-hour. As a result, I was able to draw the trend lines on the 4-hour. Down here, we have our low. Our higher low is here. Our recent high has returned, along with lower highs. The bullish structure was formed by our recent break above the prior high. We must now break above these highs, which as you may know correspond to the 200 or, a $2.64 XRP. It would be really bullish if we could begin to flip that. Additionally, it would coincide with a breakout on a daily basis, basically to start. We would be regaining the highs from May as a result. That would also cause us to flip key support on the XRP chart, putting us on a path to retesting, the highs around $2.73. Thus, once more, this is a very smart move in terms of the shorter time frame, but we must not get ahead of ourselves and simply watch and wait for XRP to actually have a much bigger break. As an aside, we recently witnessed stocks reach a new all-time high, which was extraordinarily positive. Additionally, they ended the week at an all-time high. This is because there have been a lot of significant updates regarding trade war tariffs, as well as what the Fed has been implying and telling us through large banks. We're in for a lot bigger market rally if what they're claiming is accurate. Let's begin with the tariffs on China, shall we? Here we have Trump's tariffs on China caused Bitcoin to liquidate for $19 billion, jeopardizing the October streak. As a result, October 2025 saw a 6% decline in Bitcoin, potentially marking its first negative month since 2018. Following historically average increases of 20%, President Donald Trump's 100% tariffs on Chinese software imports intensified trade tensions between the United States and China, resulting in a 14% decline in the price of Bitcoin and a $19 billion cryptocurrency liquidation on October 10th and 11th. The market is looking ahead to the Federal Reserve's October 29th meeting for potential rate decreases, and the quarter's solid historical performance offers some hope. Based on these two posts, we now have the Bitcoin archive correct. The average return for the fourth quarter of Bitcoin is 78.66%. Returns for the fourth quarter are currently down 2.48%. For November and December, there is a lot of catching up to accomplish. And once more, if we're considering this correct. And now we're returning to the standard October show. This is from the Cointelegraph. Be mindful of Bitcoins. For the first time in 8 years, October might turn red. If you're cheering for a Moonvember right now, retweet. If we're looking at this, I'll open it in a new tab so you can see it clearly. Usually it's pretty bullish when we're ending October. The only bearish Octobers we've had were in 2018 and 2014. I continue to believe that October ended on a positive note. If we consider Bitcoin as a single month, that is what we are examining at the moment. I'll just clear this chart of everything. This is what we are seeing on the chart at the moment. You know, this appears to me to be a warning sign. We appear to be in a bull flag formation. It wouldn't take much for us to reach a new peak and end the month with a profit. At least from a monthly perspective, it appears that we are simply consolidating between 108K and around 116K. From where we are now, it would only take about a 5% increase to finish the month on a positive note. Personally, I believe that this occurs, particularly in light of the future. You could wonder what's coming up next. Let's discuss it then. Let's begin with the recent remarks made by JP Morgan. Accordingly, JP Morgan anticipates that the Fed will stop quantitative tightening the next week. At the FOMC meeting in October, JP Morgan predicts that the Fed will stop quantitative tightening. In order to alleviate money market pressures and stabilize banking reserves, JP Morgan Chase strategists expect that the Federal Reserve will terminate its QT program on October 28 and 29 at the FOMC meeting. This will halt the monthly runoff of up to $95 billion in securities. Evercore analyst and Bank of America also hold this opinion, with markets responding favorably as US stock futures increase and Bitcoin crosses $100,000. In the face of persistent liquidity pressures, the change that was started in June 2022 to reduce inflation may bring in new cash and lead to more rate reductions. Furthermore, it's not only JP Morgan, isn't it? It's both Deutsche Bank and Bank of America. The Fed will also be announcing the conclusion of QT next week. A huge rally is in store if this occurs. We also have an update, which I mentioned in a prior video when I discussed how the Fed will make us wealthy. The Coastal Journal is the source of this. The Fed's QE is being broken. In just 2 weeks, the Fed's balance sheet grows by $10 billion. The use of the Fed discount window, sometimes known as the lender of last resort, has increased by 238% annually. All of this follows bank announcements of losses and collateral problems. Additionally, banks are now projecting that the Fed will halt QT next week at this very moment. The markets will soar higher, much higher, if this is accurate, which seems to be particularly concerning given that the Fed is already displaying indications that QE is starting. This would also be consistent with the October close being quite green. We have the TFTC over here as well. When Bitcoin takes off and the Fed's reverse repo facility reaches 0% liquidity, it is crumbling. Look at the bottom of this chart, assuming you're looking at it. In particular back to the end of 2020. This item